Hi everyone, I'm Emma Everett, Client Advice Manager at Momentum Wealth, and today I'm joined by Amanda Kroczek, Team Leader for our Residential Property Management team. Thanks for joining me, Amanda.
Thanks, Emma.
Now, Amanda, last time we caught up this way, we'd recently seen new legislation passed for residential tenancies in WA. And there was some confusion and concerns among property owners and property management industry as to what that would mean for tenants and landlords, as well as whether it would mean a spike in rent arrears. We also talked a little bit about the rental market, leasing market, and how that had been impacted by the COVID-19 movement restrictions. Now that we've been living with the eviction moratorium for a few months, how are things in the property management market? What are you and the team seeing on the ground?
So our rent arrears are actually lower than we initially expected. So only 5.6% of our tenants are actually in long-term arrears. We did have some requests at the start from tenants wanting rent reductions that weren't actually affected by COVID-19. So in those cases, we have actually had to clarify to them what genuine financial hardship is considered to be and what the requirements are to be considered for a rent reduction. So no doubt some tenants have had their employment affected and therefore their ability to pay their rent. But overall, yes, it has been a lot more stable than we expected.
It's great to hear the stability in the marketplace. No doubt that's been supported by the various government initiatives and industry initiatives to support property owners and tenants during this time. Now, let's have a little bit of a talk about the role of a property manager. Of course, it's a lot wider than just collecting rent. There's a lot of things that you do day to day and week to week to protect the condition and the return of an investment property. So tell us about some of the things that have been affected and the tools you've been using to make that work during this season.
So one of the digital tools that we have been using is enabling us to do virtual routine inspections, where initially we were restricted in movement and a lot of tenants didn't really want us attending their properties, and that's understandably so due to health risks involved. I am also aware that some agencies put a pause on their routine inspections during the initial period. However, the risk in doing this is that you may miss the early signs of damage or maintenance issues at the property, and those can escalate and cause a lot of damage and expense for the landlord. And there is also that insurance implication. So you are required to inspect the property on a number of occasions. And if you fail to do that, it may have an impact on your ability to claim via insurance. We also used virtual tour technology to conduct viewings for tenants. So this was so that tenants who were unwell or were unable to attend the home open, they may have been in quarantine or arriving from interstate or overseas. It allowed them to view the property online to get a better gauge of whether the property was going to be suitable for them or not before actually making an appointment to inspect the property with the property manager. And we've actually continued to use that technology because it is a great way to sort of pre-qualify tenants and actually, capture those tenants who are genuinely interested but may not be able to attend the home open due to work, illness or other commitments.
That's great to hear, Amanda. And certainly we've all been discovering in personal and business context how many things we can do online. And so it's great to hear that some of these technologies will continue post-COVID. Now, what about the compliance side of things? With all this changing legislation, what have you been doing for the team and for our owners to ensure their compliance with this changing legislative environment?
Yes, the temporary legislative changes have been a big focus for us. So making owners aware of what their obligations are and ensuring that we follow the correct procedures, not only to protect the interests of the landlord, but also to ensure that we and the landlord remain compliant.
Talking about the leasing market then, I know that we've seen some improvements in the REWA data coming out in recent weeks, where in April we were only seeing around 700 properties a week leased. In recent weeks it's been 800 to 900 properties a week and even higher. And what are your team noticing when it comes time to release a property or lease a new property that's arrived with us?
So we did see an initial decline in inquiry, which was in line with the broader decrease in leasing activity across the market. We were still leasing the properties, but we just had a much smaller pool of tenants viewing the properties and also receiving applications from. But since the restrictions eased in early May, we have seen a pickup in inquiries from prospective tenants and also more attendances at viewings, and it's remained relatively steady since.
Now, with leasing activity regaining momentum, we've seen leasing stock on market continue its downward trajectory, and so we're now seeing stock levels the lowest we've seen since 2013. Now, this stock reduction is not equal across different local markets. Perth's northwest corridor has seen a 42% reduction in rental listings compared to the same time last year, where Perth's inner suburbs have only experienced a drop of 10% of rental stock. Now, Amanda, with such varying impact on the rental market, what does this mean for someone when they're choosing to lease out their property and price it to their local market?
So one of the first things to consider is when you're going to commence advertising the property. So we generally advertise 3 to 4 weeks prior to the property becoming vacant, and this has proved very effective for us, considering that our vacancy rate has remained below 2% through the pandemic. It's also important to monitor the market closely and assess what competition is available in the area, because that will have a big impact on your pricing and your marketing strategy. In areas where the stock has tightened and there is a high demand, landlords may find that they don't actually have to reduce rents to attract tenants, and they may even be able to increase the rent slightly. However, in those areas where there is a high level of vacancy and less demand, they may need to be prepared to make price adjustments in order to secure a new tenant for the property and keep any vacancy period to a minimum.
And of course, the cost of a vacancy can be far more expensive than losing $10 a week in rent.
That's right.
Thanks for those insights, Amanda. It's great to hear about the stability returning to the rental market, bringing us back in line with the previous improvement and rental increase trends we were seeing towards the end of last year. Thanks for joining us, everyone. I hope you found this helpful and a look behind the scenes at how property managers are working to protect the return of property investors during these changing times. If you have questions about your rental property, if you'd like us to review its performance, or be a second opinion on anything that's happened during the COVID-19 pandemic, please give us a call or visit our website, momentumwealth.com.au.